Hello, I'm Andrew Keen from Edison. It's my pleasure today to welcome David Wolfin, President and CEO of Avino Silver and Gold Mines, to talk to us today about the company and its prospects. Avino's over 2 million ounce equivalent silver producer with operations in Mexico and listings in the US and Canada, and plans to more than quadruple its production in coming years. David, welcome.
Thank you for having me, Andrew.
David, let's start with a little bit of history, if you will. Avino is a very historic name. It's got a long history as an operation, and your family has history, and you yourself have history. Do you want to start by taking us back to that kind of context of how it all began?
My father founded the company in 1968. He was invited down to Mexico to look for mines that closed around the time of the revolution, because he was a stockbroker, mining financier, sent a geologist down there. They looked at a dozen projects and came back, and like this one, it was available. So we formed a partnership with a wealthy Mexican family. Avino Canada owned 49%. They owned 51%. We built the mill on the old foundations. In the 1800s, Avino was owned by the British, was listed on the London Stock Exchange, and had a market cap of £1 million. But all of that was destroyed. The smelter, everything was destroyed in the early 1900s, and there was no mining there until we got involved. And so we rebuilt the mill in 1974, ran it for 27 years, and then during the first tech bubble, metal prices tanked. Silver was below $4, gold was below 300, and the mine closed. And so I worked in the mine as a teenager back in the 80s, and then I worked in Vancouver on the floor of the Vancouver Stock Exchange in the late 80s, and joined my father in the 90s. And then so after the mine closed, I approached him and the board, and I said we should buy the other half of the mine. NAFTA's in place. I know that our partners, when they were running it, they never did any exploration. So there was huge upside potential. I was appointed president, and in 2006 got the other half of the mine. We did a whole bunch of drilling, 30,000 meters between 2006 and 2008, and then the global financial crisis happened. But I felt we had enough money in the treasury to rehab the mill and fire it up. And it took about 2 years. In 2010, 2011, we got it back up and running, and been running all the way up until the pandemic. And then we closed for strategic reasons, but we're reopened now. So.
It's a fantastic story. And you're running it at over 2 million silver equivalent ounces at the moment. But you've got plans to take that up really significantly. Can you take us through that growth plan?
Sure. We have an organic growth plan. We're going to go from 1 producing asset to 3 within 5 years. We own the assets. The producing Avino mine produces around 2.6 million ounces of silver equivalent. And then La Preciosa we bought from Coeur Mining in 2022. We had to get the blessing of the local ejidos and get the permits, which we announced this year. And we've already started development on that asset. And then the third asset is the Oxide Tailings Project. This is when we opened pit mine in the 70s and 80s and had poor recovery rates. So now with new technologies, we can reprocess that material. So we've done a pre-feasibility study on that asset. So from 2.5 million ounces up between 8 and 10 million ounces is our goal within 5 years.
La Preciosa, it's not very far from the Avino operation. You share some infrastructure, and also you've started development of that deposit.
Definitely, yeah. So it took a while to get the permits, about a year, but reasonable, and our share price has exploded since then because everyone sees that this asset's moving forward, and the Mexico's open for business, and so we timed it so we had all brand new equipment there, and we're planning to. We're building an underground haulage tunnel right now. It's 350 meters to intersect the ore. So within this year, we're going to be producing. So it's very quick to production, low cost, under $5 million. And it's 19 kilometers away on a paved road. So we can haul it to our current infrastructure at the Avino mill and process it there. And we're in a safe jurisdiction. It's in the middle of Durango, which is a high desert, probably about 1,800 meters. So it's rolling farmland. You're not in some remote area. We produce concentrate, so it's a safe product. We don't produce bars on site. We truck it to the shipping port in Manzanillo, and it goes on freighter over to Asia to our number one trading partner, which is Samsung, and it goes in their electronics.
How does La Preciosa compare to Avino in terms of cost structure, and what does it do to your cost base as it comes on?
Well, Avino is a bulk tonnage, low grade mine. But we're competitive in our costs. It's under $100 a ton because we're long hole sublevel caving. At La Preciosa, it's going to be narrower mining, which is more expensive, but the grade is more than double. So it offsets it. And our current all-in sustaining is around $20. And we feel well into next year, once we're really mining on La Preciosa, we'll get into the mid-teens.
Okay. You're a multi-metal producer. You've got some good byproducts, in terms of copper and gold credits. Are they helping that cost base at the moment?
Yeah, copper is really helping. We're producing quite a bit of copper. I think this year, 49% of our revenue comes from silver, 19% from gold, and the rest from copper. So copper is a significant contributor. But next year, it'll go up to close to 60% revenue from silver because of the grade impact from La Preciosa. And our output is going to jump next year without a big capital expenditure because of grade alone. So it's very exciting.
And with the oxide tailings treatment, that comes later, I guess. And what stage of development are you on that?
Well, when we put this plan together, it was prior to the rally. So we spaced it out. We're trying to maintain discipline, cost discipline, and use the team we have. So we were focused on La Preciosa, getting that up and running. We're doing community engagement for the third asset. So we need to get the buy-in, the blessing from the community before we go and try to permit that project. So we just spread it out. We're focusing on Avino and La Preciosa primarily. And since the rally is, we're more than a year into this rally since last March. And so now we're looking at possibly expanding Avino and La Preciosa. During the permitting process at La Preciosa, we were considering it, but we didn't want to upset the permitting application. Now we're considering amending it and maybe putting in more portals, try to get more of that high-grade material out faster. And at the Avino mill, we have 4 independent circuits, so we can keep the material separate because they don't all mingle. Avino has copper in it, and La Preciosa is just pure silver and gold.
And you've got the mine reserve to if you wanted to accelerate.
Huge. 53 million metric tons of measured and indicated, 24 million inferred. So it's 76 million metric tons. Our processing plant can do 750,000 tons on an annual basis. So you're looking at 75 to 100 years of mine life. So clearly there's potential for further expansions down the road. And we've got 2 drill programs happening right now because we're anticipating we're going to go to an engineering firm at some point to reimagine both projects. But until that time, we want to continue to drill the obvious areas. So we're drilling from surface below the Avino mine, the developed area, which is level 17. That's the bottom developed area. We're drilling below it. And we've been extending the mineralization at depth significantly. So we're excited about that. And at La Preciosa, there's 1,500 drill holes there, 90 million spent by Pan American Silver, Coeur Mining, and Orco. But a lot of the core that they used was used up in all their different studies. So we're re-drilling some of those areas that are high grade to just confirm it. And there's kilogram hits of silver in there. So we're really excited about that, and the potential for the whole operation. And there's 3 less silver companies with Gatos, Silvercrest, and Mag gone. The spotlight is narrowing down on the companies that are in production that have big resources, and that's Avino.
Nice time to be a silver producer at the moment. What are your thoughts on the silver price?
Well, we're happy with where it is now. I mean, there's a big disconnect on the silver gold ratio, so there's a potential that it can go higher, but we're making money at current prices. Our margins are over 50%. So we're thrilled about where it is now. We hope it goes higher, but we're building cash in our treasury where it is now.
You don't need to raise capital to fund that growth coming through?
No. And because we've spread out the oxide tailings project, we want to build our treasury. The oxide tailings project pre-feasibility study has a capex of $49 million. We've got about 33 in the bank and growing. So we're not in any rush to start that project. We want to build our treasury higher and then assess where we're at once we've got La Preciosa firing on all cylinders. And then we'll decide if we want to raise a bit more cash or not to fund that one.
Pretty impressive growth profile and a very long history. Once you get to that sort of more of a mid-tier status, what next?
Yeah.
I mean, what are your thoughts, in terms of longer run strategy?
Well, we've remained disciplined and focused, and then not dreaming about what's way down there. But I mean, pay a dividend, potentially, corporate transaction, or grow the company into a larger company. So there's 3 options that we'll have, and we're not really considering them at this time. We're just focused on our expansions.
David, thank you for joining us today to talk about Avino and the Avino story. If investors have any further questions, I direct you in the first instance to the Edison website. Thank you.